Most investors lose money in junior mining stocks, not because the sector is broken, but because they don't know how to decode them. Headlines, hype, a few flashy drill holes suck people in, and 80% of those companies will never make it. I'm Andrew O'Donnell, founder of The Market Mindset. And after years in finance and watching billions flow in and out of this sector, I built the drill sheet. 10 factors, 10 minutes, one score that filters out all the noise and shows you which stories deserve your money. First, rocks matter. Without continuity, without scale, without real 3D models, you've got nothing. The drill sheet asks, is this deposit a system or is it just a one-hit wonder? Without that foundation, the stock dies. Second, bet on people, not just rocks. Has management raised money before? Have they built a mine? Have they sold a project? The drill sheet scores the team the same way Wall Street scores CEOs, by track record, not by promises. Third, catalyst move stocks, not just rocks. Geology is the foundation, but stocks reprice on events investors can trade. Drill results that prove scale, JV deals, financing, resource updates. Without catalysts on the horizon, even great geology won't move the share price. The drill sheet maps those catalysts on a timeline, so you know if you're looking at the next re-rate or just watching cash burn. Fourth, know your multiples. If you're paying $100 million market cap for a story your peers are paying $20 million for, you're the bag holder. The drill sheet benchmarks juniors against peers to know if you're buying leverage or paying for hype. Now, let me be clear. The drill sheet is not a magic number. It's not a crystal ball. It won't predict the future or tell you when to buy or when to sell. What it does is far more practical. It filters out 80% of those juniors that are just noise, and it shines a spotlight on the small minority with legitimate prospects. It's the fastest way to reveal true potential and to know the right questions to ask next. That's why we tie it to CEO interviews. We've done hundreds of CEO interviews. The score points that spotlight, and the interviews let us drill deeper. This is book one of the Drill Sheet series, Unlocking Junior Mining Opportunities. 10 factors, 10 minutes, one score that filters noise and shows you the minority of juniors with a real shot. Here's how to try it. Download book one free right now. Every Friday, we go live with subscribers and we break down the 2 companies that we scored that week. If you subscribe now for just $9, we'll run a drill sheet on your pick, the company you want to see. Send us the ticker and you'll see the framework at work. Stop guessing. Start investing like the pros. Download Unlocking Junior Mining Opportunities today and join us on Friday. Good morning, everyone. We've got Chris Marcus from Arcadia Economics. Silver is no longer the sidekick. We know it's got industrial demand. It's involved with monetary policy. Investor sentiment is colliding with it in a way we haven't seen in well over a decade. And leading that charge is, of course, Chris Marcus, who's been talking about this for far longer than I have. That's certainly, and he has been ahead of this conversation for so long. He's challenged the narrative around supply shortages. He's exposed manipulation and opacity in the COMEX system and consistently brought clarity to a market where a lot of investors don't really understand this specific commodity. And this isn't just another update. This is really a map for investors because Chris has put out an extensive, detailed report that we encourage people to go to Chris's Substack. And we're gonna frame this conversation over that, but I would encourage people to go get that report, download it on Chris Marcus' Substack. Chris, it's always a pleasure. We're always excited to get detailed expertise from you. You must be a happy guy.
Well, Andrew, I'm thrilled to be here. It's always nice to catch up with you. I appreciate that kind intro, although if I may be as bold as to correct you on one thing, you said something about driving the charge. I think Jerome Powell is driving the charge right now. We're going to be completely honest about it because it's interesting how what we're seeing now is pretty similar to what we saw last summer. Now, go back almost 2 years ago to the beginning of 2024, heading into the year, everyone was saying, hey, the rate cuts are coming, the BTFP's running out. Rate cuts took a lot longer to manifest. So we didn't really see gold and silver start moving until And one way of measuring this, if you look at the ETF inflows for gold and silver, silver started a little earlier, but it was over the summer as they started to sense that rate cuts were coming. Similarly, we had another pause for the first half of this year, and now, well, we've had the first rate cut. And I think this gets lost in the day-to-day, like, is it going to be 25 or 50? Well, they just in their dot plot, they just accelerated the pace of rate cuts going forward. So they've already cut. They're going to cut again. And then when Powell's done cutting, we're going to have someone in here who's going to cut even faster. So I think that has a fair amount to do with what we're seeing in gold and silver. Some intriguing other things that are contributing on the silver side, but I don't know, the idea that, we have this generously calculated inflation known as the CPI. Look up the Boskin Commission on that one sometime if you want some real fun. That's already been above the Fed's alleged inflation mandate. And I say alleged. Andrew, did you know that was not actually official Federal Reserve policy until 2012 under the fine stewardship of Ben Bernanke?
No, I didn't actually. No.
That was actually 4 years before he wrote his triad of articles. Well, he was writing a regular column for the Brookings Institute, but my personal favorite was when he did a 3-part series on.
Oh, we lost connection here. We'll just wait for Chris to jump back on. We'll hopefully get him back here in a second here. In any event, we see silver's just trading at ask just under 44. Oh, I think we'll be having him here in a moment. But I'll fill in the blanks for him right now because the report itself has covered so much in regards to framing his thesis over the years. And what we really want to focus in on is, hold on. We've got him back here.
Every turn.
Hello, Chris. You put a little drama in there. Just make sure everyone make them wait on the seat of their pants. Like, wait, what was he going to say?
Well, that was well timed there because this is actually going to live up to it. Because I was saying, Ben wrote 3-part article on what does the Fed do when the traditional tools, when we've thrown the kitchen sink that we thought we had, and if that doesn't work, which I guess not inspiring confidence if even Ben Bernanke's wondering about that, but what do they do? And the first plank of the Bernanke manifesto was negative interest rates. Then number 2 was targeting longer term interest rates, aka yield curve control. And then he capped that off with something truly special, which part 3 was actually just titled helicopter money. Yeah, actually.
I love it.
He's not hiding and running from this. So he was the one who that's the same guy who actually decided that this 2% target should be permanent. So perhaps a lot less official than I would think your average investor would realize if you go into the history of that. Yet, nonetheless, 2% it is. We've been over that for 4 years. Inflation started rising again, depending on which month you look at. The numbers even somewhat back and forth, but rising a bit in the last few months. And the plan is to bring that down by cutting interest rates faster.
Yeah.
So I think there's people that are seeing that there's something that doesn't quite add up there. And as a result, you have a lot of interest in gold and silver. And certainly as the price has risen, we can get into it. I don't know that I wouldn't call this a mania yet. I think the momentum chasers, they got I saw a commercial somewhere. They're like, oh, that's a thing. So they're not ready to buy yet, but they're getting the possibility has maybe not the conscious mind, but it's like, oh, what's this glod? What is that over there? Oh, gold. What is that thing these guys are talking about? So.
Well, that's interesting because that's kind of where I wanted to frame this was we've been looking at this for a long time, you specifically, and just we'll focus on silver. Gold is on its trajectory as well. And part of me looks and goes, oh my God, how amazing. Like it's happening. The other part of me is like, well, no, this is what should be happening. I'm excited that it is happening. But at the same time, are you getting a sense that some of the like you've answered some of it, some people have already priced in the speculative notion, or is it that no, this is just like a first little move? Because people look at that spike back in 2012 where it shot up to 50 and then but it came back down. This is not the same momentum or same kind of pace at which it's been building. So what do you think is the same, similar, different kind of sentiment that's out there?
That's a good question. And without having looked this up recently, although I was talking to someone about it yesterday, I feel like I remember in 2011, I remember that one quite well. More fun on the way up than the way down. You on a lot of GLD and SLV calls. But that aside, I remember it happening a lot more quickly in 2011. And I guess as we found out in 2011, it was a spike that now it stayed in the 40s till about August, or I mean, it came back down to the 30s after that $50 peak in the weeks after, but then got back up there throughout the summer. So it wasn't as brief as what we saw in 1980, where I think silver was only above 50 for like a couple of hours at one point, and obviously went down a lot more quickly. So it's different what we're seeing now. Although I guess perhaps maybe the big thing is that, we hear about $50, 1980, 50 in 2011. I'm guessing that most silver investors, let's say silver went up to 50 and then next year it was back down to 30, they would say like, well, it was nice to see it, but leaving the restaurant still feeling a little hungry. And I think there's a better case to be made. I mean, obviously money's been devalued since both of those periods, but there's a better case to be made that what we're seeing now could be something that's more ongoing than just a brief spike and then having it come back down, which I think in the end doesn't really help most people with what they want. So, I mean, I know you on your question list, you wanted to get into the deficits and the things that are going on there, and certainly some of the headlines that are coming out. And I'll add, especially in the last couple of days, I am now seeing and hearing not just people on YouTube who are saying silver is going to go to the moon, but some of the things I've read from certain bankers, conversations. CME had a dinner last week, and someone I know was there, and it was interesting. He was describing a conversation with a senior level banker who's in the silver market, and he was like, they're really legitimately concerned now, and rightly so. I don't know exactly if Daniel Galley is correct, although I haven't double checked his math, but I know he does great research. He's an analyst for TD Securities, and he wrote that paper. He's been writing several papers about silver over the past couple of years about how we're sleepwalking into a squeeze. He talked about how the LBMA free float was getting low, was getting close to the level that's required for the daily turnover in London. Now we're below that. And in his most recent report, he mentioned that the current pace of silver going into the ETFs, that we're 7 months away from an issue with the supply inventory. Although he also added on top of that if the pace going into the ETFs were to revert to what we've seen historically during a rate cutting cycle, then we would be 4 months away. So I don't know that I would say go out and load up everything on 4 and 7 month call options, but the fact that someone that is a very credible, well-respected analyst is putting a statement like that in there, I think speaks a lot to, that we could be on the verge of the type of issue that many people have expected for a long time. Although it's interesting, like back in the 80s, yes, you had the Hunt brothers, and it's intriguing to think if they hadn't made it sell only on the exchange, what could have happened. Yet we did not have we haven't had a silver shortage where companies could not get the physical metal they needed for their products. It has not happened since 1980. I'm sure there's some point historically since silver started being a thing that it has, yet We haven't seen that since 1980. We haven't seen that since 2011. Yet here we are in 2025. And I mean, I try to be conservative. I understand. I have a show on YouTube, and I know it's like, people like here, well, silver's going to explode and hit 3,000 an ounce. And, but I tend to be a bit more reserved, saying like, all right, where can my thesis be wrong? And
I think it's always a more conservative, appropriate response, like to be, especially when it seems like it's on the verge. It's more painful whenever you're sitting, in the tougher years, thinking, why isn't this moving like this? Don't people know what's happening? Whereas, and tell me if I'm wrong, I just kind of was thinking of this, is the explosion of interest because of people like yourself and YouTube, and just generally people wanting to know about the economy, started to really wake up to there's significant problems that maybe wouldn't have 10 years ago. Well, 10 years ago, maybe, but 20 years ago, the interest and the amount of people out there who can provide information that's outside the mainstream narrative has gone up dramatically. And especially younger people are far more interested in trying to understand, okay, what's happening behind the scenes? And perhaps do you think that's maybe easing off the spikes a bit too, that people are slowly going, okay, I see what's happening, and tempering it so it doesn't have this a huge up and then a huge down?
I mean, I get what you're saying, although I'd be careful about what you or I may think we're tempering. I mean, the price is going to do. I know there was someone on Twitter who was upset with me because I think it was last Thursday or Friday after the price was soaring again, and just having watched this for a decade and a half now, it's like by the time you get the generally disgruntled silver investors who are usually thinking about how the price is too low, by the time they're getting exuberant and saying, oh, we're going to hit 70 at the end of this year, and this is not an official calculation by any means, but no. I've just noticed that especially this year, since I write a daily column now, I've been just thinking about it in a different way. And there's been a couple of times where it's like, this could be about the point where we're going to see a bit of a sell-off, and sometimes people do or don't like that, but I mean, it's like it's not going to go straight up most likely, and you're going to have these along the way. So I don't know. I would be careful about what we expect or think should happen, but I mean, I think you're going to see a lot of volatility, and I guess the one difference I would say to what you described is that, yes, on some level, of course, it helps that anytime there's more people, more buying power. Yet the interesting thing here is that really we've seen a lot of selling. We've seen historic levels of selling on the retail side for the past couple of years. I think maybe easing up a little bit this year. So what you have right now, retail has been selling, although really since, let's call it between May and July of last year, that's when the metals start going into the ETFs. So this has been driven a bit more by, let's call it institutional rather than retail.
Yes.
Now, could institutional people be watching stuff on YouTube? I mean, I have some people who are at banks that watch this. So, I mean, but also you have Bank of America. They've been writing about this for, I don't know, year and a half. And a lot of the other banks have started picking up on it. And then, of course, you had something, whether you say that's the tariffs, which I think is still an open question. But I mean, when that metal, especially the amount of metal that came here, I think there was about 300 million ounces in registered and eligible in the COMEX around January, and that went up to 500 million ounces. I mean, the registered category, which got below 30 million ounces a couple of times, that's somewhere where I believe it's well over 100 million. So I think people are seeing, that something is going on. You see this EFP premium spike a couple of times in the past year. And in case anyone's not familiar with that, that's basically just the difference between the London spot market and the price on the futures on the COMEX in New York. So It's like you're seeing like the engine, one day it's smoking, then the next day you're driving, like it sounds like marbles are dropping out of the bottom. And
Yeah.
you're like, well, the thing's still moving. I guess we'll keep going. Yet there's signs going off, something is happening, and then at the end of the day, inflation's still over the transitory target, and I mean, they even put it in their projections that at the dot plot. They're like, well, we see inflation going higher, we're going to lower rates faster, and okay, well, how's that going to work out? We still don't have the tariff thing resolved. So I mean, anybody you talk to who's actually trying to plan a business these days, they'll tell you plenty about the tariffs. It's not resolved. You have the gold and silver market can't figure out by the day whether gold or silver are exempted, which in some ways is strange to me because, we had the exemption back in April, and there was the erroneous report from a government department a month or two ago. Trump came out, said on his Truth Social that gold's not going to be tariffed yet. It wasn't until he put it in an executive order that people believed it. And now I know within the banking community, there's uncertainty, and maybe it doesn't matter what I think, or I'm like, I thought this was already decided. We don't need an executive order to tell us that we're not following a silver standard in that part of the Constitution anymore. So it's like, why? I don't understand what changed yet. What I do or don't understand is irrelevant here, because you can hear and see and read about people in the banking world that things are getting priced because they are uncertain. So, a lot of stuff building to a head this year. And what's amazing to me, though, is that it's not like, gold's at 3,800, silver's at $44 because the Treasury had a failed auction, or, they're talking about a reset. I mean, we've moved there, and, certainly if you're watching, the pressure there is building. But I mean, if at the end of the day there was one single reason that drove me into gold and silver, however many years ago, it was like, well, the world's reserve currency is based on a debt system that is never going to be repaid.
Yeah.
That's, now you get the Fed, and there's all sorts of other stuff that goes in there, but you have the prices have moved before that. Not only hasn't it been resolved, it hasn't even been addressed. It's still being ignored. All these programs and plans from Besant and Trump, which I won't try and rile people up with the politics yet. I haven't heard anything that's talking about, hey, this is how we put it on a long-term sustainable path, aside from Besant's assertion that they're going to grow their way out of it, which I'm not sure that that's exactly how it's going to go. But
yeah, it's tough to see. There's a crypto strategy there. There's obviously AI investment. AI is taking off, but how much growth are you going to need? I mean, I like this story, the narrative. Yeah, who was what accelerating growth? Like, that's huge. That's great. But life isn't quite that easy. And I think that people, regardless of the politics, that's ambitious. I like parts of the plan. I'm not a huge crypto guy and whatnot, and I know that there's a strategy there. But I think it just draws more people to go, fine, maybe there's a crypto here, there, whatever else. But here's what we know is safe and solid. Here's got 6,000 years of research and whatnot. And more importantly, it's not that me or Chris or anyone else is talking about it. It's that this is what like other central banks are buying, like at the end of the day. And I guess I'll follow that up with, do you think we're going to see, I was tracking this for a little while, like more family office funds when I was saying, you know what, maybe we need to be involved in this market now. Like, this is actually happening. Like, this is getting the returns that, like, say I've done exceptionally well in AI or something like that, where you're like, we've hit a peak here. I got to take some money off the table. We need to feed the system that's also, because it's an industrial metal, that's going to support the energy required for any of this AI.
And I'm sorry, what was the specific question?
So do you think that there'll be like a lot more funds, family offices kind of growing into this, stepping into the field? Because that could provide, not compared to like the Feds or central banks, but that could provide a lot of buying power as well as selling power, but create more of that frothiness as well.
I mean, I could see that happening. I don't know that we're quite there just yet with family funds and offices. I mean, think about it. You know, you have like the group think mentality on Wall Street, and then a lot of the family offices are taking their cues from there. So, and you know how it is. Like the golden, like you could have like pets.com part two, and like, yeah, well, maybe they got potential, but you talk about something where you can't like click on it on E-Trade and complete everything you need to do. I think stuff like that just takes a little time, although, you know, clock started a while ago.
Yes.
I actually did talk with someone yesterday who's bought gold from Costco. Said he's done it online and in person, and I think those things are adding up over time. I guess I hope this doesn't happen, although I think it unfortunately is somewhat likely. I wonder if and when we get another round of inflation, whether it's something as severe as what we just went through, more, hopefully less, but I would wonder if that might be one of those aha moments for a lot of people where it's like, all right, maybe I don't know what's going on, and Democrats are saying this, Republicans that, yet stuff is getting really damn expensive. Maybe that clues something in about something being off with the money. In turn, you know, Andrew, you kind of touched on this, but in terms of what actually gets people buying and bringing new people in, I think the two biggest events in the last 20 years were the housing crisis in, I say 2007 through 2009. Everyone likes 2008 because that's when Lehman collapsed, although that was my first year trading my own book on the options pit. So I remember 2007 quite well. But, you know, you had that's when I was introduced to all this. And I think there were a lot of other people that were hearing about Ron Paul back then. And then similarly, when COVID happened a couple of years ago, hopefully I'm allowed to say that on whichever platform we're on here today.
Yeah.
You know, then you had it was like another new wave of people coming in. And then when you have banks fail in 2023, stuff like that is when there's like a big event that gets people in there. And again, it's like you think over, you try and don't get too cute on the timeline, but I don't know. You look at cutting interest rates when inflation's high. The government, if you needed any final convincing that they're not going to cut spending, I think Elon Musk put the final nail in that coffin.
Yeah.
I mean, he was right up there in terms of like a public figure that, you know, was actually saying like, hey, you know, because like Andrew, if it's you or me saying, hey, like it might not be a best idea to keep spending like this. It's fine, but you know, there's just certain people that have a certain stature. So, I mean, before that, you had Ron Paul, who was one of the most public advocates that spending money endlessly that you're never going to repay is the best idea. But I mean, Elon Musk, well, he's got a much bigger profile than Ron Paul. He went in there. I mean, he was tweeting left, right, and center about, hey, we found this, government parties here, they're running out of food. I mean, just ridiculous stuff. And then I think ultimately you had a court order block anything from actually getting cut. And here's someone that went in, had people's attention. So this was a chance to show that something other than just piling it on until it blows up or there's a restructure is, you know, that something other than that can happen. And you couldn't have had it. Reminds me of how the Jets season is going so far. I'm like, wow. It's like it would have been hard to think of like a set of scenarios, even beyond the 0-3 record, where it's just like any positive that you could look to, or it's like, well, you know, they got clobbered, but at least the rookie over there was good. Although they had one rookie who played well. But I mean, that's the same with Elon, where it's like that situation went about as bad as it could. He walked out of there saying this was bullshit.
Yeah.
They're talking about cutting money, and then also said some alarming things about Trump on his way out, which he apologized for later. I don't know what one takes about that, and I guess that's a whole other field which we probably don't need to dig into today. But at the end of the day, I mean, all right, maybe someone out there thinks they're gonna. Here's the thing. At this point, you can't even fix this by cutting spending.
No.
Because you're what is the government 24% of GDP.
Yeah.
Most of the tax revenue is coming from stock market gains. So
Yes.
I mean, you're past that point. There's no. So I mean, go ahead.
No, I was going to say, it's one thing if you had room, right? Just if you're going to print money and you go, we got room, we got some room here. But if you're at the point of we can't make the interest payments, then it's like you have no room. Like that's whatever, like the not tinfoil hats, but people go, oh wow, the only way out of this is war. Like that's the next level of how do we get out of this kind of thing. And that's kind of, you hear in circles of that's a possible solution, which is always just a nightmare solution for people to banter around. But
Andrew, I don't know if you saw this particular part, but I put it in the report where it's like it's to the point where I'm like sitting there thinking, I'm like, gee, which is more conceivably possible, that somehow there's a balance to this silver deficit, or that the U.S. government ever repays the debt? I'm like, gee, that's a hard question. I mean, those are two long shots, and that's why you're seeing the price of silver $43, $44. That's why you're seeing gold at 3,800 or whatever it's at now while we're talking here. I mean, these things are coming to a head. We've seen they can move slower than an iceberg, but when they matter, they had, as I also mentioned in the report, but when they do matter, they come with the potential for an asymmetric impact where it's like,
yes.
Well, I lose my dollar, but if I was getting 1,001 odds and I hit this one, well, that's a little, and I don't know what's the official break point or what metric someone's looking at, but I mean, if you wanted to summarize the last half hour in 2 sentences, that's it. That's what you have going on. It is being reflected in the markets now, and I'll just remind everyone, next year we're going to have someone who's going to cut interest rates even faster and harder. I think they should just bring Bernanke back. Save some time. And Andrew, here's a question, if I may turn the tables on you for a moment.
Yeah.
Is Bernanke the one guy who would ease so much that he could possibly even make Trump uncomfortable?
That is definitely possible. We've got a great comment here too. What would Janet Yellen do? but yeah, no, I think it's definitely possible. I mean, it would be like excitement at first, like, oh, he's doing it, and then it'd be like, oh boy, this is a train out of control. But here, listen, I know you've got a time limit here as well. Your report, and I mean, you're always talking about leasing costs, EFP spreads, premium divergences in regards to silver. But let's shift a bit to supply growth. Like that's a big factor. That's kind of a way of me kind of mentioning that we focus a lot on juniors, on explorers, on operational leverage as well. But what do you see as far as bottlenecks, whether it's permitting, grade decline, you name it? What are you seeing on that front? That also, because you're talking about asymmetric gains, is, I mean, if silver's going crazy, I mean, you don't have to look too much further at some of the producers of gold and silver. You don't have to look at some of the explorers that are like, they're leaping. And this is, once again, it hasn't started. Like, this is the early innings of what's happening to a lot of producers, a lot of explorers. So maybe fill us in on that side of it.
Yeah, well, I mean, if you're looking for a bottleneck, Andrew, people review the videos you've been doing for the last year, where it'd be one thing if there's a situation where, all right, there's a deficit in the silver market, but all right, we got all hands on deck, get the boys a couple extra shovels and drills and trucks and stuff. But it's been the exact opposite of that. Now, that's finally changed this year, but there's quite an esteemed mining executive. Andrew, do you know Jorge Ganoza from Fortuna Mining?
I know the name. Yeah, I haven't met him personally yet, but yeah.
4th generation miner. So his father and his father and his father were mining, and I mean, if you hear the man speak, you can tell he knows what he's talking about, and it's been interesting. They're a sponsor to our show, so he comes on, especially after the earnings. And he's said this continuously for about a year and a half, where He's saying this is the most severe mining stock bear market in my entire career. And Andrew, again, as you well know, a lot of the junior companies, they couldn't place a financing a year or two ago.
Yeah.
So if you needed to go out and drill or move a project forward or find out whether there's a resource there, I mean, these guys were struggling to stay in business. So yeah, you could, let's say silver goes to $100 tomorrow. Okay, will that encourage new projects and production? It might encourage it, but you have two big problems. The first one, and maybe the smaller one, although it's big in its own right, is that like, okay, let's say silver hits 100 by the end of the year, or even by next year. Let's say it goes gradually up. So what are we in September now? So over the next 16 months, silver goes in a perfect non-volatile line up to 100. Still, if it gets to 100 there's going to be mining executives sitting there and thinking, okay, it's great that it went to 100, but before I allocate capital and into my project based on this model, there's some chance it comes back down. So there's the degree it's like one thing for the price to go up, but to get people doing new projects, you need them to think the price is going to stay there or stay above some level that continues to make it economic, right?
Yes.
So it's kind of hard. I'd love to get your opinion on this. I mean, except over a longer term, like, because you know what the sentiment among the mining stock people, let alone the mining stock executives, like where it's like, all right, how many times have I been burned? I don't think that's going to be an easy, like, oh, okay, the price is here, let's lever up. I don't think that's going to happen easily. So it's not the easiest scenario to see how that comes about, where if you had $100 silver, will capital come in? Well, actually, probably what would happen is you'd probably have so much capital come in, especially from mainstream or momentum chasing, that I guess then you'd probably have money that has to go somewhere. And I wonder if it ends up going to people who are not the best stewards of it. So anyway, that's problem number one, which is significant in its own right, but standing in front of door number two, which is that let's say somehow that all happens. Is it going to take a couple of years or decades, depending on where the project's at now, before you're getting silver out of the ground? And, I hear people fighting over the solar numbers, which I know Michael DiRienzo from the Silver Institute well. I've met Philip Newman from the Metals Focus. So for what it's worth, if you're telling me I think it's an imperfect science. So if you're telling me you think there's deviations from the numbers, I can handle that. I would be beyond stunned if there was an intention to not put the best numbers they're able to come up with. But in either case, based on what we're looking at, I know some people are saying that, silver is going to level off. A lot of the solar forecasts that I went through do expect growth to continue, but at a slower pace. But here's the thing. It's like whether we have the Samsung battery or I read the EIA or the IEA, one of those government energy, they're talking about how we need to double the electrical grid by 2028. That's three years away. So yet all this stuff, which we can leave aside that Oxford Economics did a study of the projected growth in industrial silver usage over the next decade. They came back at 46%. We can say, all right, we don't know what's going to happen, but just with the numbers where they are now, and Metals Focus also put out that based on, and you can speak to this, there's not a lot of big new silver projects coming online. So it's not like, once Joe gets his mine up and running, we'll be good to go. That doesn't currently exist. The project that, they're just working on it. Not saying there won't be new projects out there, but in terms of depletion and replenishment, you don't have that coming online. So even if nothing changes, if you don't have any growth, and the numbers are even anywhere close to accurate, which I would suggest the declines in the inventories would support, you still have the gap. So you need something to change just to get back to even. And perhaps just if I could add one last thing to help bring that all into context, is that I had a good point there, but either case, you're running that deficit now, and that the last thing I wanted to add is that you do still have inventories have been declining, but we're not there where it's like, there's 1 10-ounce bar left.
Yeah.
If you look at the size of the inventories, and there is also what's held in retail holdings, which has been coming down, so there's still a couple 100 million ounces in the COMEX. Now, whether that's available or not, we don't know. And on the other hand, there's also what Daniel and others have pointed out about the free float in the LBMA getting low. So we might not be far off when there's only 10 ounces left in the bank. Who knows? But it's going to be a darn fascinating time to watch. And hopefully people will enjoy that report. That was the purpose, to have something that showed, where we were, how we got here, what we're really looking at, and not just, well, it's going to go here by this point, but here are the different scenarios, here are the different things to watch out for, and I'd like to think it's a handy roadmap. So, but I don't know, you read it, you tell me.
Yes, no, I mean, it's a great blueprint. 100 pages, very thorough, and it touches on so many things. I don't want to give away too much. I didn't want to ask too many questions that would answer some of it, because we want to encourage people, strongly encourage them to go give it, go to your Substack, download it. Especially, we've got lots of your fans on, and they're very vocal. They're big fans, but some of mine, you could reach out to me. We can send you the link as well if for some reason you can't find it. But Chris, Arcadia Economics on Substack, you should definitely get this. It's absolutely thorough. It's packed full of data and information. And for us, I mean, the bedrock for me when I look at things is, of course, the actual commodity. That's the thing I'm always excited about, especially in mining. That's the main thing. And I'm glad you touched on some of these things. Like, we know there's a roadmap for an AI data center, or some projects coming on in regards to chip manufacturing. You can go, okay, in 2028, then 2031. So people in industry can go, okay, I can now base things and base my plan and have a project management plan. But right now, we don't really have that in mining. And that big question kind of you're hinting at was, exploration is the R&D side. And a lot of these producers, they're making just money, cash over, like hand over fist. And a lot of them are just paying it back out. And yeah, that's a safe bet. Reward the people that have been in there for a long time. But at the same time, you go, well, hold on. I mean, your business is to grow. But those hands have been slapped in the past so many times, because these aren't small projects. Like, let's bring on XYZ. Well, that could be $2 billion, or that could be 800 million. And we got to deploy the capital. And even if we had the permits, even if we are allowed to go and do it, how long is that going to take to build out? And because there's been that holdback, I don't see how there isn't a bottleneck, even with companies holding like stage 2 kind of jewels that they have, that they're like, well, we can bring this on. It's a big onerous challenge to bring things on. But that's where the operational leverage is that we like, on our side, is that you have the commodity moving, you have all the economic structural issues that you're talking about, and sooner or later, people will trickle down and go, oh, do we have this stuff? They go, no, we don't have enough of this stuff. We have to be mining. There has to be funding into this, and we have to have a pathway. We've got Fast 41 in the States, which is fantastic. We kind of have some sort of a metric that's kind of hard to tell. It's not very committed in Canada. I won't bang on too long about that. We're focused more on the US because that's the driver. That's where the impetus, that's where the money is that's going to come. And, I think sooner or later, people are going to start to realize that other countries around the world are doing this. They're mining, they're producing, they're refining. And we need to catch up, and we need to be funding them properly so that they maybe even have a problem of, oh, I've got too much cash. I mean, it's a nice problem to have. They kind of have it right now. They've got tons of cash, but that they have to go, well, we need to spend some money in R&D. We need to go buy some projects. There's great projects. That's kind of what our drill sheet does. We can send out to anybody who sends joins our Substack, we'll send him, top 5 kind of Excel drill sheets of a quick analysis of exploration companies that are in that green lit kind of zone or higher probabilities. That's kind of what our model is doing right now, is kind of sifting through a lot of the noise. There's hundreds and hundreds and hundreds of juniors out there that people don't need to know about. And that's kind of our focus and our expertise. But having your research that touches on all of that, and then gives us the ability to go, okay, great. We know the silver market's happening. Who are the companies out there that are pure play silver, which there's not a lot, but who are the ones that are like a gold company or copper that actually is kicking out a ton of silver? And what are they doing? And those are the things that I find really compelling and interesting. And having your research where you focus on a commodity and you know everything about it. I mean, it's hard to know everything, but really you are truly an expert. And I don't use that word as lightly as mainstream media, as where everyone's an expert. You are an expert in this space. You know it inside out. And it's fantastic to be able to have you on to remind people that have been following you for so long of what you've been telling them for a long time, but as it's unfolding, and then to give the blueprint of, listen, here's the scenarios that can unfold, so that people can make decisions. I mean, that's it. They have all the information in front of them.
Well, that's kind of you to say that, and appreciate that, and just appreciate you having me on here. And hopefully people enjoy the report. The feedback has been good on it so far, and I'm really happy that the people that are reading it seem to be enjoying it. And I just hope it helps to navigate some of the things that are coming, which I don't think have to necessarily be negative, but anyway, these are the things I'm seeing. And if you found today's call helpful, the report touches on a lot more of that in detail. And just thanks again for bringing me on to discuss it.
Absolutely, Chris. We always love having you on. It's fantastic. Enjoy the rest of your day. And once again, everyone, check that report out. If for some reason you can't get it, send us a quick tweet or whatever else. We'll send a link as well. But of course, it's Arcadia Economics and Substack. Chris, take care. Always wonderful to chat with you. We love the wisdom and the insight. Take it easy. We'll talk again real soon.
Thank you, my friend. Appreciate that.
Take care. Most investors lose money in junior mining stocks, not because the sector is broken, but because they don't know how to decode them. Headlines, hype, a few flashy drill holes suck people in, and 80% of those companies will never make it. I'm Andrew O'Donnell, founder of The Market Mindset. And after years in finance and watching billions flow in and out of this sector, I built the drill sheet. 10 factors, 10 minutes, one score that filters out all the noise and shows you which stories deserve your money. First, rocks matter. Without continuity, without scale, without real 3D models, you've got nothing. The drill sheet asks, is this deposit a system or is it just a one-hit wonder? Without that foundation, the stock dies. Second, bet on people, not just rocks. Has management raised money before? Have they built a mine? Have they sold a project? The drill sheet scores the team the same way Wall Street scores CEOs, by track record, not by promises. Third, catalysts move stocks, not just rocks. Geology is the foundation, but stocks reprice on events investors can trade. Drill results that prove scale, JV deals, financing, resource updates. Without catalysts on the horizon, even great geology won't move the share price. The drill sheet maps those catalysts on a timeline, so you know if you're looking at the next re-rate or just watching cash burn. Fourth, know your multiples. If you're paying $100 million market cap for a story your peers are paying $20 million for, you're the bag holder. The drill sheet benchmarks juniors against peers to know if you're buying leverage or paying for hype. Now, let me be clear. The drill sheet is not a magic number. It's not a crystal ball. It won't predict the future or tell you when to buy or when to sell. What it does is far more practical. It filters out 80% of those juniors that are just noise, and it shines a spotlight on the small minority with legitimate prospects. It's the fastest way to reveal true potential and to know the right questions to ask next. That's why we tie it to CEO interviews. We've done hundreds of CEO interviews. The score points that spotlight, and the interviews let us drill deeper. This is book one of the drill sheet series, Unlocking Junior Mining Opportunities. 10 factors, 10 minutes, one score that filters noise and shows you the minority of juniors with a real shot. Here's how to try it. Download book 1 free right now. Every Friday, we go live with subscribers and we break down the 2 companies that we scored that week. If you subscribe now for just $9, we'll run a drill sheet on your pick, the company you want to see. Send us the ticker and you'll see the framework at work. Stop guessing. Start investing like the pros. Download Unlocking Junior Mining Opportunities today and join us on Friday.